Hello friends, welcome to Bankers platform. So friends, today this video is regarding the International Trade Finance Certificate course. So let's start. So today we will be discussing trade-based money laundering, TBML. So what are the risks, scenarios and ethical practice? So in this video you will be understanding the TBML techniques, red flags and compliance measures. So let's start. So first, introduction to money laundering. So money laundering involves disguising financial assets so that they can be used without detection of the illegal activity that produced them. Through money laundering, the criminal transform the monetary proceeds derived from criminal activity into funds with an apparently legal source. So all of you would be knowing what is money laundering means whatever the illegal money is there that the process of making illegal money legal. Okay, so there are three stages in money laundering. First is placement, layering, and integration. So in placement, what they do, introducing illicit funds into the financial system. Layering means complex transaction to secure origin and integration. Funds appear legitimate. So why trade is vulnerable? So in trade, in international trade, why it is vulnerable? Because high volume cross border complexity. So because high volume of transactions are happening and it is a cross border complexity, so very difficult to detect. Some countries rule may like there will be some privacy rules of some country that they won't share the data and all. So due to that also in international trade, money laundering activities are more as compared to within a same country. So let's see some of the points which are important with the exam point of view. So what is trade-based money laundering? So misuse of trade transaction to move illicit funds across border. And it is a sophisticated method used by the criminal to disguise illicit fund by manipulating international trade transaction. So this article provides a comprehensive understanding of the basic technique, red flag, global impact, and prevention measure associated. So the characteristics are like involves fake invoices. So in international trade, what they will do, they will be making the fake invoices. Okay. And mispricing. Suppose something is of $10. Some product is of $10, but they will do the mispricing that $10 they will show $100. So this is a okay, phantom shipment, harder to detect than traditional money laundering. No direct cash movement. Okay, so FATF estimate that trade-based money laundering account for 80% of illicit financial flow. So 80% of money is going through this trade-based money laundering as per FATF. So what are the common techniques? Okay, so first is over and under invoicing. So there will be over invoicing or under invoicing. Exporter overstate prices, importers understate them. Okay, multiple invoices, same goods invoice multiple time to different banks. False description, declare luxury good as machine parts. Phantom shipment, goods never shipped but invoices generated. Transfer of transfer of pricing abuse, manipulating prices between subsidiaries. So these are the way in which this trade-based money laundering is happening. So in real world case, like case one is that the Banco Delta Asia scandal 2005. In this what happened that North Korea used this way by fake gold and tobacco trades. Okay, so in that what happened, over invoicing was there and rapid resale at a loss. In case to UAE gold trade misinvoicing 2020, in this $40 billion in gold export from Africa had inflated invoices. So what was the outcome? That funds funneled to tax havens. So case three is Bangladesh bank heist. In that, hackers laundered stolen money via fake trade deals. So in this way, the trade-based money laundering is happening. So red flag of TBML. So first is that documentary red flag, that is mismatch invoices or bills of lading. Unusual shipping routes, goods routed through tax haven. Like what they will do, suppose somebody has to send the goods from one country to another country. So they will route the goods from those country where less taxes are paid. Okay, behavior red flag. Frequent last minute changes in trade terms. Use of shell companies with no real business. So some shell companies, they will make fake companies and there will be no business, but they will show that import and export. Suppose one country is raising the invoice. Okay, they are raising the performa invoice, and based on performa invoice, they are getting the advance payment in their country. And after that, they're saying that deal is cancelled. Okay, after that, they're saying deal is cancelled and they're not returning the fund. So in this way, this money has become legal. They may be putting in the pro forma invoice some terms that if within this much days goods are not made, not delivered, or if full payment not received, this amount will not be refunded. So many types of ways are there by that the there is a money laundering happening in trade businesses. Okay, next is risk of TBML. So first is financial risk is there, that fine will be there, loss of banking access, reputational risk, loss of investor trust, and regulatory risk, that is violation of FATF, OFAC, AML, CFT laws. So ethical practice to combat TBML. So that is enhanced due diligence. So what we have to do, we have to do the enhanced due diligence. We have to verify the suppliers, buyers, and intermediary, AI and blockchain solutions, track trade finance transaction in real time, whistleblower protection, encourage reporting of suspicious activity. So somebody is doing any suspicious activity, then we have to report to the concerned agencies. Compliance with FATF recommendations, follow recommendation 16 on trade transparency. So these are the things that to be used for combating the trade-based money laundering. So regulatory framework is that FATF recommendations are there, US Bank Secrecy Act, EU 6 AMLD that are there, and UNODC's Container Controller Program. So these are some guidelines that are used by the bankers and used by the exporter importers also sometime, so that they should not fall prey to a wrong transaction. Okay, so there is some data that approximately $300 billion is laundered through the United States each year. And in 2020 alone, global bank were hit with $10.4 billion in fine for money laundering. Iran stand at the top of anti-money laundering risk index with a score of 8.6, the world's largest, highest. Okay, in UK there were 8,652 cases of misuse of facility among people who were under the age of 30. And money laundering in the US makes up 15 to 38% of the money laundering globally. And already we discussed in the first slide that 80% of the money is going in money laundering through international trade. So conclusion and takeaway, friends, that is trade-based money laundering is sophisticated but detectable with proper control. So technologies like AI, blockchain is critical for monitoring ethical trade, that is compliance and transparency, and report suspicious activity to regulator. By this, it can be mitigated. Okay, so this is the end of the session, friends. Don't forget to subscribe our channel, and we have a course in certificate in international trade finance that will be very helpful for you in clearing the exam. And we are also having the mock test series, which will help you. Suppose you are having the book study material with you, you can opt for the mock test series, which will help you in clearing the exam with good marks. So thank you, friends. Thanks for watching. Don't forget to like the button if you are benefited from this video. Do like the video and comment if you are having any query, and share this video with your friends who are preparing for this exam. Thank you, friends. Thanks for watching. Have a nice day.